Hey guys, what's going on? It's Rekt Capital and welcome back to the channel. I hope you're having a fantastic day today. In today's episode, we're going to be talking about the bear market. We're going to be doing some bear market analysis and answering the question that's on everybody's mind. Are we in a bear market or are we still in a bull market? And the answer to that question is that we're not in a bear market. And I'm going to share with you a few insights supporting that, because for the most part, we're probably going to realize that a lot of the bear market calls right now are more of an emotional argument than a logical one. And I'm going to explain to you why that is. So subscribe to the channel if you haven't already for more videos like this in the future. But of course, like the video if you're enjoying it so far. So let's dive into the video and let's set the scene for what we're going to be talking about, because this is the quarter one, the first 59 days of 2021 for Bitcoin, and it's very important to just get a macro perspective on what's going on and what we've seen already and what could potentially be happening in the future. So far we've had two uptrends. One uptrend was 7 days long and the other uptrend was 30 days long. And if we just look at this in a macro perspective, 63% of 2021 Bitcoin has enjoyed an uptrend. So that's essentially 37% of that time, 37% of the 59 days that were in 2021. Only 37% of those days is what Bitcoin has spent in a downtrend. So you can just see here that in a bull market, Bitcoin tends to spend most of its time in an uptrend. And of course, we've also had some corrections. 2 weeks, right? We saw the 30%, 31% correction in January, which took 2 weeks, roughly speaking. And now we're seeing a 26% pullback, which is 8 days long. And on average, you see a 16-day correction through the lens of the 2017 bull market. So in 2017, we've seen an average correction of 16 days, ranging anything from a few days to even a month. But generally speaking, 2 to 3 weeks seems to be the norm. And in this case, this was a totally normal Bitcoin bull market correction. And at the moment, this is also a normal healthy pullback. But I'm not talking about this as a correction, because we don't even know if this is a correction. Because if we look at even this year, before we got a correction, and even during uptrends, we tend to see dips, minus 21%, 16%, 16%. We've had 3 dips already, 1 correction, and this is now a pullback, but we can't be sure whether this is a dip or a correction, because corrections tend to be 30 to 40% deep by standards of the 2017 bull market. But in the 2017 bull market, we also saw 12 dips, just like this one, just like this one, and just like this one. And those 12 dips ranged between 10 to 25%. So now we're actually seeing a 26% pullback. So can we classify it as a correction? Well, minus 30 to minus 40, it's not a correction yet. Can we classify it as a dip? Minus 10% to minus 25%. This is definitely on the cusp, or at least on the verge of that definition. At the moment, we are still in a technical dip, which has been slightly more extended, because in 2017, we also saw extended dips, which took a few days and even a week or more. So at the moment, this is a 26% dip, 8 days long. So that's the whole perspective on 2021. So let's talk about some of the signs that we can use to spot a bear market. Well, in 2017, this is the $20,000 peak right over here in 2017 that started the bear market. And in just a few days, this is 5 days, just a very narrow space of time, 5 days. In just 5 days, we saw a minus 45% crash. And of course, this depends on exchanges, right? Because on BitMEX, the top was 19,800, but for other exchanges, the top was 20,000. So it was a minus 45 to minus 47% crash in only 5 days. So if we compare this extended dip, where we're essentially seeing quite slow pulling back, and of course, buying the dip aggressively, but unfortunately, price still going down, this sort of dip buying is still showcasing that buyers are still there. Buyers are still interested, even though they're a bit early and are now trapped in their positions. They're still aggressively buying the dip because that's what they're used to in this bull market. Buying the dip is generally a profitable trading strategy, but not during an extended dip, not during a correction. Whereas over here, you can actually see that once we saw the crash, there weren't many long downside wicks, really, compared to over here. Look at how long these downside wicks are. There's quite a bit of buy interest here, and this relief rally also present. We didn't really see a relief rally anywhere here, so very strong sell side momentum in this bear market retrace compared to here, which was more controlled, more dip buying going on, even a relief rally before further continuation towards the downside, but still some relief happening along the way down, long downside wicks. Here you can't say the same. Strong sell side momentum, very strong crash, which was of course bought up, but then after this minus 45% crash, which compared to controlled 26% retrace in 8 days, there is a difference, right? Minus 26% in 8 days and minus 45 to minus 47% in 5 days. There is a difference in the sell side momentum, and we just spoke about that, breaking it down not only in the sell side momentum and in the candlestick analysis, but also over time and how this dip buying and buy side interest is different here as well. But not only this, we saw after that 45% correction, it took 20 days for Bitcoin to relief rally a bit more, but ultimately set in a lower high. So this is the high and this is going to be the lower high. So it took 20 days to just confirm this bear market. So essentially, if we see a crash and then a relief rally and then further continuation, that's a very good confirmation of a bear market. And the reason I share this with you guys is because it took 20 days to reach that confirmation. So if people are calling for a bear market after 8 days, having dipped only 26%, you know that they're saying that with no confirmation from a technical standpoint, right? Because you need to have confirmation in order to confirm a bear market. Whereas talking about a bear market on a retrace without that confirmation, you can't with absolute certainty say that we're in a bear market. Many people are saying that we're in a bear market already with absolute certainty, but from a technical standpoint, there is no confirmation, especially since we saw a much shallower retrace, which took 2 weeks. And this one is only 8 days and shallower at minus 26%. So talking about a bear market now with absolute certainty, you know that there's no technical confirmation, which means that this isn't a technical argument calling for a bear market now, it's more of an emotional one. So that's one of the other things to mention when considering whether we're in a bear market or not. But let's talk about some historical price action as well. This is from my Rekt Capital newsletter, 5 facts about Bitcoin bull market corrections. I'll leave the link in the description down below. And in this free newsletter, I essentially talk about how we tend to see retraces in a Bitcoin bull market. It's very much normal price action preceding further upside, a healthy pullback. Corrections tend to be anything between minus 30 to minus 40%. And if we think about this retrace, of course, it's minus 26%, so it's not even a correction yet. But these corrections are very short in comparison to the uptrends that happen afterwards. That's something very important to mention, because every time we saw a pullback, it was a small pause before further upside. Small pause before further upside, which is much more extended in time. Of course, around the end of Q2, we saw an extended correction. This is something to bear in mind. End of Q2, we'll probably see an extended correction in Bitcoin's price action, because this tends to be the case over time. But in any case, generally the tendency is that a pullback will precede further upside, and this upside will be much, much larger than the pullback that happened. So over here, a minus 40% correction, and then we probably saw price rally 80 or 100 or 110% later afterwards. So that's also something to really bear in mind, because the uptrends are visibly longer than the downtrends, and these downtrends, like you can see, the corrections last a week to 3 weeks to at most a month 2 weeks, a few days, 2 weeks. So really important to bear that perspective in mind, and this more macro perspective where we're in the early stages of this 4-year cycle. Remember, we've just started a 4-year cycle a few months ago. 2021 is going to be the most exponential, most bullish year for Bitcoin since 2017, since 2013. So we always see an exponential candle in candle 1, in candle 1, and in candle 1, and even though we might see a diminishing rate of return in the candle 1s, if we extrapolate these historically recurring tendencies, you'll still see a very strong candle 1 nonetheless, going beyond $100,000 for Bitcoin. So very important to maintain that macro perspective when considering the price action of Bitcoin today and on retraces, most importantly. So to answer the question, is Bitcoin in a bear market? I don't think so, based on all this analysis, all these insights, and I hope that you don't think that also. Having said that, that's about it for today's video update. Thank you so much for watching. Please subscribe to the channel if you haven't already for more videos like this in the future, and of course like the video if you enjoyed this one. I'm Rekt Capital and I'll speak to you in the next one. Speak to you soon.